Hello, I'm Liz Lumley of Finextra, and we're here at EBA Day in Helsinki, and I have just taken off the panel for the integrated market for card, mobile, and internet payments. So we're all going to talk about payments innovation. So I'm going to start with you. We're in what a lot of people are calling the Sepa era, and which was hard fought to get to this stage. So now that we have this foundation laid, does that mean we're going to start seeing more innovation in the European payments market?
Thank you first for your positive approach in the way that the foundation has been laid. Well, in fact, we are now in the last few meters to getting everything implemented. But indeed, I think that with Sepa credit transfer and Sepa direct debits in place across Europe, and within 2 years also in the rest of the European Union, I think a lot of new products and new services could be launched based on this common platform. But this is now to be delivered by the banks, the payment service providers. But we should not forget that besides credit transfer and direct debit, we still have to work on cards very much, because cards are one of course the biggest payment instruments we have in Europe, and there the market is still very fragmented. Maybe not for the card holder, but for all processing industries involved. Standardization per country is different rules across countries, and there's still a lot of work to be done. And of course, innovation. Innovation is key, it's the buzzword. Innovation, in our view, can be built on the basis of harmonized instruments, credit transfer, direct debit, and later on cards too. But also needs a very strong legal framework. And for that, the new Payment Service Directive 2, and also the interchange fee regulation for cards, in our view, will provide a good basis, once approved, for the market to further develop and to deliver. Because that's what your question is about.
So now that we have this foundation, what's next for transaction banks then?
I think transaction banks need to adjust to the new reality. I like to take an analogy from 20 years ago when the internet started to be consumer accessible. And there was a global infrastructure called the internet, but to access it, you actually had to go through local phone operators using local national phone plugs. So the reason for that was technical, and it was security, but really it was of course a barrier to market entry for other players, and made it very difficult for people accessing this system. Nowadays there's Wi-Fi, and phone operators are no longer a long part of the equation, and nobody worries about phone plugs anymore. So maybe in the payment areas we should take that as a lesson and say, okay, there's national payment card schemes, people are paying with checks, there are different ways of internet payments, and we are really seeing today that there are alternatives outside of the transaction banking community that are offering these services, just using the Internet of Payments, if I can say, of the Sepa standards, but providing access to the consumers in a more convenient way that's adjusted to the consumer requirements. I think that's the key learning. We need to have a good trade-off between security and convenience that makes it attractive for the consumers to stay within the banking sector when using and accessing payment infrastructure.
So it's interesting you mentioned telcos. I'm going to move on to you. I mean, what can this industry kind of learn from other networked industries in terms of the harmonization and standardization going on?
I think the payment industry does have exactly the same kind of characteristics as let's say the telecom and the postal services. But the main difference is that in the payment business, we need to take care of also the settlement. It's not only transferring information from one part to another, but the settlement is also very important. So the same problems like a chicken and egg, you need to have both the users and the providers on the board at the same time, payers and payees. So you need to find a solution how to attract the critical mass of users in the beginning, in order to get the service fly in the future. So these are the basic similarities besides the economies of scale and other type of scope economies that are also inherent in many other network industries.
Excellent. So I'm going to round off our discussion with you. I mean, how important are open standards then for the payments industry?
When we're talking about a network industry, we have to see that growth is pivotal. And open standards gives always an opportunity for different developers to participate in this network and to provide new values into this network. And if we now focus, let's say, on the bank accounts, there are more or less three main values bank can deliver to the customers. There are interest rates, security, and making best use of the funds held on bank accounts. So we do not only have to take account about the security, we also have to make sure that banks provide best service in respect of making best use of liquidity held on the accounts. And to make best use of the liquidity, we need different ways of making use of it. And the innovation powers of banks should be complemented by the innovation powers of third parties. Therefore, banks not only have to think about how to work with open standards on a technical way, they have to come up with a clear business strategy, making sure that they can apply open standard strategies on their own interest to make sure that making my accounts open, keeping it secure, but making open, having the opportunity to get more innovative power outside of the banking industry, be used for the individual bank's customers. That I think this is very important, and banks have not come up with a solution for this question yet.